You're looking very serious, Dave. You're obviously ready to go.
Ready to go.
Who's got the dodgy mic?
Probably me. Is it me?
It's me. It wasn't dodgy when I was testing it before.
Just need a shout, mate. That's what it is.
Woo! Come on. All right, I'm shouting. Good morning, everyone. How you doing? Yeah. Love the enthusiasm.
Good morning, Mr. Glue.
Love it. Who hasn't been to Morning Startup before? Okay, a few people. All right, well, just to let you know what we do. So, yeah, my name is Scott Glue. This is Dave Newman. We're both startup founders, and when we started this thing 11 years ago now, we just wanted to get other startup founders in a room as often as possible, initially at a coffee shop, to talk about what all the crap we're going through is all about and try and solve our own problems and meet other people in the same headspace. So that's why we run this. We try and put on an interesting speaker. So today, you're probably aware, it's Rob Nathan who's going to tell us all about the angel investing industry here in Perth. And yeah, we run this every 2 weeks, rain, hail or shine. So in 2 weeks' time, we've got, I've got a slide for it, but it's all about how to become a programmer in 6 months. And then after that, we've got some new VCs and yeah, it's all cool. So thanks for coming. But first of all,
shameless plugs and introduce yourself. So this is your opportunity to stand up, introduce yourself. Often Morning Startup brings people together. So it's about, you might have a request, meet somebody like a founder or a developer or somebody can help you with marketing. So your opportunity now, anyone who's new wants to stand up, tell us where you, what's your name, where you come from, the project you're working on, and also have an ask. So who's brave enough to stand up?
I did it last time. Can I have another go?
We'll give this man here from Joe first, and we'll come back to you.
Yeah, I've been a software developer for many years, and I'm managing teams now, and I'm actually looking for an interesting project to join. So if you need someone on technical side, let me know. You can find me on LinkedIn, Alexander Zhukov. It's ZHIDKOD. Yeah, I'm available part-time now. It would be nice to join us.
let's have a chat.
Okay, cool.
I'm going to set you a challenge to do what you did, but do it in a shorter amount of time.
All right. I'm Curtis. I'm up from Busselton. I'm a wheat belt kid from out in the middle of the wheat belt. My focus is drought management and groundwater salinity management, quality water for livestock in times of the dry. I've turned, well, there's equipment that can make water or seawater economically viable for farmland irrigation. So what I've done is come to putting an end to drought and groundwater salinity, positive action against climate change today. That's what I've done.
Nice.
Well, next time you come, we'll get you to do it again.
Sorry, are you looking for funding? Are you looking for anyone to help?
Yes, that's why I'm here. That's why I've come up.
Funding.
And then I've got to drive back for 3 hours to go back to work.
I love the dedication. It's great. You know this is live streamed too, but just saying.
They're going to get to know me.
Absolutely.
The best way. Who else is brave enough? Go on then.
Morning, Richard.
Hold that. Just working.
Morning, Richard from Monacera Solutions. So essentially, I use a design thinking process to help startups really kind of put the customer or the end user at the centre of what they do and help develop their product to commercialisation. Currently looking for some angel and or VC support for 3 businesses that I'm helping at the moment.
Okay. You've come to the right place.
Who else is brave enough to stand up? Gentleman here, Scott.
All right.
Hi all, morning. I'm Melinda. I'm coming from a network engineering background, and I have a startup of a tech industry, MSP, providing support for small, mid and medium businesses for the tech support stuff. So, and this is my wife, and she has another startup for herself as well. Yep, good. Wow.
Yeah. Hi all, good morning, and I'm Milasha, working full-time as an accountant. So I'm planning to launch a clothing brand. So looking for investors who's interested to invest on my business. Thanks.
Wow. Running in the family. It's good.
Anyone else? One more person. Who's brave enough? Gentleman at the front here.
Hey everyone, I'm Max. I'm from Fitness Empire Company. We are a fitness nutrition supplement company and going for creating the best formula for our products to be able to benefit all the fitness junkies and gym junkies and everyone else that want to join the circle. At this point, we're looking for funds to help us do our R&D and basically production cycle. Thank you.
Brilliant. Welcome aboard.
Great.
Thank you very much. No more?
Anyone else?
Last
Any
chance.
other hustlers out there?
No more? Okay, cool.
Okay. Cool. Founder Sundowner is on tonight. So obviously you're all morning people, but if you're not, or even if you are, and you just like to speak with startups in a pub, come on down. Nowhere Man, a brewing company in West Leederville from 5:30 p.m. Look at these people. They look happy. You want to be happy too, right? Come on, let's go. So this is in 2 weeks' time. Dale has recently learned to code. He learnt in 6 months and he's now working for one of Perth's leading software dev shops, Mechanical Rock. He's going to show you how you can learn to code as well, because a lot of the time as tech founders, we've got an awesome idea, no idea how to actually technically implement it. So if you can learn some tech chops, it's always good. You can then speak to developers more intelligently. You can outsource your code and actually review what they're handing into you or whatever. It just gives you options, right? So come along and learn his process on learning how to code in 6 months. All right.
Yes, we couldn't do this without the great support of some great supporters. So basically, Ammo, if you are looking for marketing, then check out ammo.marketing, if that's correct. And also check out their Weird Growth podcast, which comes out regularly. And that's got some great... you've been on it, haven't you? I'm sure, Charlie, you've been on it as well. Have you not been on it? Oh my God, they're missing. Right.
They were really scraping the bottom of the barrel when they got me on.
If you've been on it and Charlie hasn't, then there's something wrong in the universe. So, but yeah, check out their Weird Growth podcast.
Yeah,
this morning.
I know what you're trying to say.
Yes,
all right.
Weird Growth podcast.
Awesome. And for Beecham Group, Glenn's usually here. I don't think he is, but if you're looking for talent or you have talent and want to get a gig at a good startup or a good company in Perth, head to Beecham Group. They're a boutique recruitment company here in Perth and can help you out. And Keep Space.
Thank you very much, Keep Space, for supplying us breakfast this morning. If you are an e-commerce, a startup or company and you want a localised fulfilment centres, then check out Keep Space. Basically, they have warehouses. I think they've got one here in Perth and they've got one in Melbourne. Yep. And basically, they will then do your fulfilment for you. So connect your e-commerce shop into them and away it goes. And they take care of all the hassle for you. So you're not sat there with duct tape and trying to cut things and
a garage full of
paper cuts and goodness what else. So yeah, thank you Keep Space for the breakfast. We really do appreciate it.
Yeah, and so we're going to have like half an hour of networking at the end of this, assuming, Rob can get off the stage in enough time, but we'll see. So we got some food and get to meet each other and everything. Cool. Is anyone in e-commerce, by the way? Is anyone shipping? Yeah. Oh, cool. Yeah. Awesome. We'll get around Keep Space. And also to the New Industries Fund by the Department of I always say education because that's the industry I'm in. Please say the words for me. Jobs, tourism, science and innovation. They provide the live streaming that we've been going on for this year, thanks to perthvideo.com. So if you want to jump on the live stream, it's perthvideo.com.au/morningstartupperth with hyphens. It's in the meetup description and everything. Share it around with all your friends. It's actually being live streamed for the regions so that the community centres, startup hubs like Yanchep and people that can't actually get here can get this good content as well. So
hello to Geraldton.
Yeah, absolutely. And Y-Hub, if you're watching, I know you've got a watch party there. G'day, hope it's going well. And thank you, New Industries Fund. Woo!
We couldn't do this. We've been going for over 11 years now, was it 12 years this year, since 2011, and we couldn't do this without the great supporters here of Space Cubes. Basically, Space Cube give us this space every 2 weeks for free, and we just bring amazing people like you into this space. If you are looking for a co-working space, you've got Riff, Flux, and
Fern.
You've got Fern. And now you've got over in Sydney.
Yes, that's right. It's going nuts.
If you haven't subscribed, check out startupnews.com.au. Every Friday comes out with a little nugget of what's going on in the industry. It's great for those of you who are bit disconnected like I am, who want to understand who's doing great things in the ecosystem, your way of finding out.
Awesome. Plus 8 Accelerator. If you want to become a better entrepreneur, get around Plus 8. So it's a program run out of the whole Space Cubed ecosystem. Dave's an ex-cohort member of Plus 8. So it works. He's got a successful company up and running.
Two.
Holy shit, man.
The first one I split from, but yeah, obviously the first one was one that went through Muridi.
You need to do a morning startup talk and talk about your story. We're going to get you in.
Yeah,
all right, and Startup WA, I saw Sharon here. Hey, Sharon, how you going? What's new with Startup WA? Just to put you on the spot.
Morning, everyone. Wow. Hi, Jan Chef. That's super cool, by the way. Yeah. So, hi, I'm Sharon. I should maybe stand here.
Here in front of the cameras.
Oh, that is...
Oh, you really did put her in it today, didn't you, Scott?
Good morning, everyone. So Startup WA is a not-for-profit organization, really being there to hear about your thoughts. What do you want from WA? Where can the government help you? Really to hear your thoughts, what can be done in order to make your entrepreneur's life easier. And we put it together. We will then put it in a report, have a meeting with Charlie and the minister, and then really hope that we can all accelerate WA and make it more diverse for founders to settle here.
Fantastic. It's a very, very noble job that you guys do. Thank you. Thank you for being put on the spot at such short notice. Good on you.
And if you haven't checked out TechBoard, check it out, claim your profile, your way of basically putting your company up onto TechBoard, and they do a summary every month of who's raised capital or who's doing great things in the industry.
Does data on TechBoard make it into WA Deal Room automatically?
Starting to, yeah. So
okay.
TechBoard helps us with Deal Room, which is
awesome.
a platform about that.
Perfect, yeah. So wa.dealroom.co if you want to learn about the West Australian startup ecosystem or the funding data and all of that stuff, you can put your data there as well. But if you put it on TechBoard, it will make it into that too. Sweet. All right, get in touch with us. Morning Startup on all the things. Please, if you're interested in talking or have a topic or want to tell us we suck and we should do things better, or you want to report dodgy photos that get uploaded to our meetup group or something, do that. All right, but that's probably enough for us. We're going to hand over to Rob now. Rob's he's a startup guy. He's done Australian tenders. He's been on our side of the table, and he's also been putting his own funds into WA startups for quite a long time now. And he's going to tell us all about the angel investing system here in Perth. So please get around him. Rob Nathan.
Thank you very much. That's just a manual.
There's your clicker.
Oh, there's my clicker.
Let me get your slide deck up and running.
Cool.
It's this dude, isn't it? It should be.
Great. Thanks very much, and thanks everybody for coming down this morning and giving up your early mornings to listen to me talk. The topic for today is how to raise capital from angel investors. I mean, I didn't set out to become an angel investor. It's one of those things that's just happened through my startup journey, where I've just become an angel investor. And I think in Perth, there has been a challenge over the last 10 years of raising investment capital. It's still really hard, although things are getting significantly better. We'll talk a little bit more about that. And the angel investing side is still a bit of a problem. Finding angel investment capital in WA is still really, really hard. And that's the problem I'm working on, to try and help solve that problem. And that's part of what I'm talking to you about today. All right, that's the wrong button. That's the wrong button. That's the wrong button. This is probably the right button here. There we go. Look, I'm just going to start telling about a bit of my backstory and some of the lessons I've learnt through my career across a number of different entities, associations. Firstly, on the left-hand side there is Time Magazine's Machine of the Year. So 1983 was basically when I started university and doing an engineering degree, and that year Time Magazine normally does Person of the Year. In that year they published the Machine of the Year, which was the computer. So that just goes to show how old I am. Essentially how long that I've been around in the startup ecosystem, and also to some extent, you know, how much has happened really over the last 40 years in terms of tech, that we've gone from that to where we are today. Look, I'll start my journey with, in this year, 1983. In 1983, I went to UWA to do engineering. I finished that year with 3 NMs and a C- in terms of my grades. For those of you who don't know, NM stands for no mark. Yeah. I told my dad that it meant nearly made it. Anyway, undeterred by that failure, I switched across to Curtin University and completed my engineering degree there. So I guess first lesson learned is failure is part of a journey. As a startup, you will fail along the way and you just get up, move on. And other advice there is, as a startup, lots of people get overly identified with their own startup. Your startup is a company, it's separate to you, and if it fails, you've got to somehow try not to take that personally. It is a company, it may well fail. Try and step back and not be overly identified with your startup, which is really, really hard. Moving on from university, I worked as an engineer for a few years, and then I went to work for a company called ERG, which is back in late 90s, before the first tech crash. That company was a high-growth startup based out of Perth. It grew to 1,000 people and almost eclipsed Wesfarmers to be the largest company by market cap in Western Australia. Ultimately, that company kind of failed, but not really. I guess in that company, I worked as a product manager, and our products were a combination of hardware, software, and we were selling those products on a global basis. We were developing hardware, so developing hardware is really, really expensive. Hundreds of thousands of dollars, and very, very difficult to change. Hardware, once you've developed it, it's not as easy to change as software. So there's no way we're going to spend lots of money, hundreds of thousands of dollars, in developing hardware that we weren't sure our customers wanted. So what I did as a product manager is we actually built wooden block models of the products that we were planning to build. And in fact, I took my wooden block model, I remember I had it in a suitcase, and I literally travelled around the world with our salespeople, meeting customers. I even went to a trade show and sat there at a trade show with a stand there and my wooden block model sitting on the stand talking to customers. So that really was getting out there about validating the problem. Is this really a problem? And also validating whether or not our customers saw our product as being a solution to that problem. So I think there's a tendency with software, because software is easier to build than hardware. There's the temptation to go out and build software, but I think the same principles apply, that really what you need to do first and foremost, even before you start coding, is somehow get out there, talk to customers with some minimal viable product. In our case, it was a block model, a wooden block model, with some version of your product. It may well be a clickable prototype built in Figma, but find some opportunity to get out there and talk to your customers, get their feedback, and validate that the problem you're looking to solve is real and that the solution you're looking to develop does solve that problem. So in your journey, in terms of particularly raising capital, as an investor looking at your company, we'll be looking to say, have you really validated that this problem exists, that it's real, and that there are multiple people who have the same problem? So that's the first part of raising capital, is doing that part. ERG ultimately, well, it didn't really fail, but it was ASX listed. That company still exists today in the form of a company called VIX here in WA that employs about 100 people in WA. So it was while working at ERG that I had the idea to start my own. Well, I had an idea to start a business, which really was a platform that facilitated the tendering process. To be honest, it wasn't a great idea. It wasn't an original idea. There are other people out there at that same time doing that same thing. But at the time, it was actually the best idea that I had at the time, so I thought I'd give it a shot. So I think what matters more than your idea is probably your capacity to execute. I think ideas on their own are worthless, and really it is your capacity to execute on those ideas is just as valuable, if not more, than the original idea. Part of my journey at Australian Tenders, I was a product manager, so what I did first up is I wrote a requirement specification for the software that I needed for Australian Tenders. I went out and got quotes for that software development from some local, this is a really common journey still today, is you go and get a quote from a local software developer to develop your product. In this case, I came back with a quote that was about $250,000. So I didn't have $250,000. So I thought, where do I get $250,000? So I made one attempt to raise capital, which was I spammed Paul Bassett who was working at Seek. He was yet to found Square Peg Ventures. So I spammed Paul Bassett, catching a copy of my business plan, saying, hey, look, I'm developing Seek, but for tenders. Would you be interested in investing in my company? Anyway, to his credit, he did respond to my email. It was spam, but it was a very, very nice and genuine thanks, but no thanks. So I had no money, so that was the end of my attempt to raise capital. So what I did at that point in time is I had some money in my super fund, so I created a self-managed super fund, and then I borrowed $5,000 from my self-managed super fund to start my startup. Generally, that's not, you won't get your financial advisors recommending that, but you can do that under this little sort of in-house assets rule in super funds. So I started my own company with $5,000 I borrowed from my super fund, and what I did in terms of execution, I bought an off-the-shelf PHP script for $500, and I hacked that script to basically produce essentially the first version of my product. So essentially that was back in 2009, and I bootstrapped that company ever since, and I own 100% of it. I guess a couple of things I learned out of that is, so it's been 13 years and I bootstrapped. Problem with bootstrapping, it's a great way to get started. What's that? Bootstrapping is pulling yourself up by your own bootstraps, which really means basically funding it yourself, getting customer revenue and using that. I mean, bootstrapping normally involves getting customers fundamentally to fund your business, which is great. I mean, it means that ultimately you own 100% of your company. It means you don't have a board of directors to answer. You don't have investors who are hassling you about when are you going to exit. The challenge is it takes a longer time. So I'm 13 years into this journey. If I had raised capital, then I'd probably be where I am now within 5 years. So I think the purpose of raising capital is basically to enable you to go faster, rather than necessarily get your idea off the ground. You should really try to get your idea off the ground yourself with your own capital, funding from friends and family, but ultimately raising capital should be more about growth and growing your company and scaling your company. Look, I had the benefit of 2009 that there wasn't a lot happening in Perth. In fact, there wasn't a lot happening in Australia, so there wasn't a lot of competition. The problem today is that there is a lot. Every person who pitches an idea or a business to me as an investor, I can typically go to the United States and find a similar company with the same idea with millions of dollars of capital. So the challenge is, today, bootstrapping is not as easy as it was in the past because there's lots of well-funded startups. So raising capital is probably more necessary now than it was, but still bootstrapping is an option, getting funding from customers, and that's something that you should consider. 2009, the year I founded Australian Tenders, E-Group popped up on my radar in the form of the front cover of Business News, and on that front cover was none other than Charlie Gunningham, who was presenting here last week. So I'm just going to check how I'm going for time. Great. So E-Group was really, I would classify E-Group as being the start of the ecosystem in Western Australia in 2009. It was the first meet-up group of entrepreneurs in this space, and still going today, like Morning Startup. At E-Group, it was basically entrepreneurs meeting to talk about their experiences and the problems that they were having at the time. And in fact, it was at that first or maybe the second E-Group, I met a guy called Graham Speak. I'm not sure if you know Graham, but immediately following that first meeting of E-Group, Graham came and pitched to me his idea that was in 2009. He then came back and pitched to me again in 2010. He came back and pitched again in 2011, 2012, and then in 2013. And by that stage, I thought this guy has got so much persistence, so much resilience, that I kind of went, okay, Graham, look, here's $20,000. So that was the start of my journey. And what I learned from Graham is basically persistence and resilience. He is the most persistent and the most resilient startup founder probably in Australia. He's been going for like 20 years, still fits in the startup category, and he's still out there hustling, raising capital. And I only hope that hopefully that persistence and that resilience, in theory, should pay off. So you do need persistence and resilience. In E-Group, my second investment, I made through somebody who I'd met at E-Group. So one of the key points is when I invested in Graham's company, I'd known Graham for 4 years. The second founder I invested in, Jeremy, I'd known him for probably at least a year, 2 years. So generally, most people aren't necessarily going to invest in you the first time they ever meet you. That's not the norm. I would say on average, probably 6 months to 12 months is probably the time span between when I first meet somebody and make an investment. So it's really, really important if you want to raise capital is to engage in the startup ecosystem, engage with potential investors before you need to raise capital. Because, what I'm doing as an investor, typically, someone presents to me, they tell me about what their plans are, what they're doing, what they plan to do in the next 6 months. What I want to see as an investor is, do they actually do what they say they're going to do? So you catch up with them in 6 months' time, and you see that they've actually done what they said they were going to do, and then it starts to become an attractive investment. So one of the key things about raising capital is to really engage early in the startup ecosystem. Events like this, the +8 accelerator program, even applying for innovation booster grants with the state government, the people who are evaluating those submissions you put in, it gives you press and it gives an exposure. So really you need to start networking and engaging in the startup community and with investors now, before you need to raise capital. Following eGroup, in about 2015, I decided to do a startup accelerator program here in Perth. In fact, it kicked off here in this building at SpaceCubed, 2015-2016, and we did 15 startups through the Vocus Upstart Accelerator program across those years. Also had the name Vocus. Vocus were essentially a sponsor of that program, and I had to go out and raise capital. So also I didn't raise capital for my own startup that was bootstrapping. I had to go out and raise capital for the Upstart Accelerator program. So I went out and raised $550,000, which wasn't quite enough, but it was enough to get going. And that was like probably 3 checks of $100,000, 3 50s, 5 20s, and a couple of 10s. So that was the kind of mix of that $550,000. And the challenge was, and what I learned from that, is it's really hard to raise investment capital. It is a full-time commitment. So if you're going to raise capital, you really need to commit to that process, and you need to prioritise, what is my priority? Am I going to go out there and speak to customers, particularly if you're a solo founder, chase customers and chase customer revenue, or do I dedicate myself to raising capital? Because it is a full-time process, and if you don't commit to that process, you won't be successful. So you've really got to make a deliberate decision, is am I going to raise capital or not, and not exist in this halfway zone between kind of raising capital. You really got to commit to that process and commit the time. That's why it's great in your startup to have a co-founder, because what it means is if you don't, if you're the solo founder, if you're raising capital, you don't have the bandwidth to also keep progressing your company. So that's kind of what I learned through the Vocus Upstart Accelerator program. So we did 15 startups through 2015-2016, of which 13, as of today, have failed. One is still going. But one of those is doing very well, and that's a company called GeoMobi, who are recently in the news, who raised $3 million. So effectively, we're 15 companies through the accelerator program, and hopefully, if GeoMobi keep going the way they're going, that one startup will hopefully repay all the lost investments, all the money that we lost in the companies that failed, repay that money, and also deliver a return for investors. So it's been essentially, 8 years since we started that program, and I'm now starting to get some of those investors sort of sending me emails saying, when will a liquidity event take place? So now getting not necessarily pressure, but investors wanting to know when they're going to get their return. That fund was established on the basis of 10 years. So, and again, we'll reach the 10-year mark and we probably won't have had an exit. And that's typical across most venture funds in this country, is exits from startups take a long time. Failure happens really fast, like companies will fail in 2 to 3 years, but the successful companies will take 10 years plus. So as an angel investor, you've really got to be long-term patient. You've got to be thinking about investment returns in 10, 15 years is where the successful companies will be. So after running the Vocus Upstart Accelerator program, after 2 years, it's really hard work running accelerator programs. And at that point in time, I didn't have the data to continue. And also, I couldn't bear the thought of having to go out and try and raise capital again. So thankfully at that point in time, Space Cubed and Brodie and the team put together the +8 accelerator program that's been running since 2017. And that is now probably the second longest running accelerator program in Australia after StartMate. And again, they'll be running a cohort this year. And I encourage you guys, anyone here, think about applying to the +8 accelerator program. Even if you don't make it through to the program, there's a +8 accelerator boot camp. And that's in and of itself a very, very valuable part to be involved in. At the same time as I started the Focus Up Start Accelerator program, I joined the Perth Angels as an angel investor. I've been a member there since 2015, and I've made quite a few investments with companies that I have found through the Perth Angels. So the Perth Angels is still going strong today. Also, over the course of the last couple of years, founded along with Charlie again, the Frio Startup Fest that's been running now for 4 years as part of the West Tech Fest. And now I'm also on the organising committee of the West Tech Fest. And as part of that, what we are doing, and I'll talk about it a little bit later on, is spinning up the West Tech Investor Network, just trying to solve that problem of the early stage funding for startups. Just clicking through a few of my slides here. As I talked about before, I think there's confusion generally, a minimum viable product versus the first version of your product. The minimum viable product is the minimum version that you need to start learning from your customers. It doesn't have to be a working version of your product. As I said, it could be a clickable prototype. So get out there as early as you can, engage with customers, verify and validate the problem that you're solving. That's Australian tenders. Again, comes down to the concept, this cartoon demonstrating the fact that ideas really are worthless, that execution really is the key. I'll skip past that one, but basically that's work by Derek Sivers, suggesting that basically the value of a business is really dependent upon the quality of your idea and also the quality of your execution. So effectively, a brilliant idea with no execution is worth $20. So anybody here today has got a brilliant idea? I've got $20 and I'm prepared to invest today. Yep, I'm not lying. That's the quote that I got, $250,000 for from a local development agency, and that's the PHP script that I hacked, that I bought for $500 and hacked to produce the first version of Australian tenders. Without going through what's on the left, Reid Hoffman, who is the founder of LinkedIn, said if you're not embarrassed by the first version of your product, you've left it too late. So, if you're not careful, you can sit around and finesse your product, add more features. The reality is you need to get out there as soon as you can with that first version of your product. I've got one question mark here. This is what used to be in my presentation, was that sometimes something that satisfies the needs of users is more important than the look. I don't know, I think to some extent maybe that's changed a little bit. I think UX, UI design is really, really important, and you probably can't get away with something that looks really clunky and really bad, but it shouldn't be that hard to design something that looks good with the design tools available like Figma and other things. Again, main point there, ideally, really the first version of the product you should build yourself. It doesn't mean that you have to build every version of your product, but you should try and build it yourself. I mean, Scott was talking earlier about the learn to code in 6 months. So rather than spending $250,000 on getting an agency to build your product for you, go and do the Learn to Code course. There's, no-code platforms like Bubble, like Webflow. There's lots of opportunities where you can build the first version of product yourself. As Scott alluded to, the reality is that teaches you about the development process. It means that you know more, that you can then engage with software engineers. So build the first version yourself, and then maybe subsequent versions, engage a software developer to do it. Oh, sorry, I didn't throw that there. There we go. There's the cover of Business News. Look, there's a very, very young Charlie Gunningham up there. It wasn't just you. That's the E-Group Committee. That's the E-Group Committee. Laurie Smithdale, Seabreeze. Again, another startup founder who's bootstrapped his startup. Mark Wozniak from Rent, and Jackie Shevington, who was I Need Hits, I think, in that. Became Bonfire, yep. And there were other members of the committee as well. Charlie, there was Greg Reeby, Greg Reeby, yep. Yep. So for me, that was the start of the WA startup ecosystem back in 2009. As I mentioned before, first step, angel investing, start networking, engage early, start building a list of potential investors. Before you need to raise capital. All right, first thing you need really is a bit of a strategy in terms of capital raising. I think the first part of it is be capital raising or don't be capital raising. Don't sit in this halfway house of, having a pitch deck and kind of raising money but not. Either commit to the process or don't. So if you're not raising capital and you come across an angel investor, what you say is, look, I'm not raising capital at the moment. I'm planning to do a round in 6 months' time. Do you mind if I get in contact with you then? Start building that list, set a date of when you might do a capital round rather than this may or may not be capital raising. How much capital raise? Enough to get to the next significant milestone. Maybe it is the second version of your product or a particular feature that you want to add, or maybe it's money to do marketing to get more customers. 12 to 18 months worth of cash flow is generally the accepted time frame. The reality is, let's say raising capital is probably going to take 3 months, full-time commitment to raise capital. So you really don't want to be raising 6 months of capital. It's going to take 3 months to raise 6 months, then you're basically continuously raising capital. So 12 to 18 months gives you enough time, 3 months raise capital, 12 to 18 months worth of runway, then you'll have to be capital raising potentially again. Have multiple plans in terms of how much investment capital you need. And I think that you need a plan for $0, right? If you don't raise any capital, what is my plan to get my business going with $0? And then maybe a 100K plan. If I only raise 100K, what would I do? If I raise 500K, what would I do? Have multiple plans of how you might use your capital, including a plan if you don't raise any capital at all, which is probably, may well be a likely scenario. Not necessarily a bad scenario, but it is a likely scenario.
How about a plan to win?
What's that?
Having a plan to win, setting out to win.
Yeah, yep, of course, yep. I mean, that's almost like an implicit given, is that you have to believe what you're doing. Yeah, and you have to be passionate, committed, believe in what you're doing.
Wait till I get going, mate.
Look, I'd suggest that, as I talked about, you engage early, create a list of investors who you want to target, and this is a big one, I reckon, is creating fear of missing out. I mean, since I've been angel investing, I've only missed out on one deal in which some venture funds took the majority of the round, but there isn't enough competition in Perth. Most investors don't have that fear of missing out. Most investors are risk adverse, which means the tendency then for investors is to procrastinate, not invest, wait and see how the startup progresses, what it achieves. So there's a natural tendency for investors to procrastinate, to put off investing because there's no pressure to do so. So I think the key for closing and getting investors on board is creating essentially the fear that they might miss out, which is hard because, question.
So that's all great, but from a founder's perspective, if you fail and you don't get the funding, you're going to feel like shit basically. Like you didn't get the funding, you're going to feel disappointed, you're going to feel like, man, do I continue this project or not? Like, what would your advice be for founders that, say they've got the $0 plan, but they didn't get the 100K? What would be your advice then?
Well,
how to get over that kind of hump of...
Right. The hump of,
That's right. But for a lot of people, like I was saying before, separating yourself from the business is very difficult.
Yeah, it is really, really difficult. Most people take it really, really personally, and that your rejection potentially by a potential angel investor or a potential venture capital fund, you might take that personally. But really, it's a case of, at this stage, it probably means that you don't meet their investment criteria. So don't take it personally. It's just probably maybe you're too early. In some cases, you could be too late, that you're not in the right space. So you just got to. Believe in yourself. You still believe in yourself and get on with that $0 plan. And hopefully that means that maybe in 6 to 12 months later, You take that feedback on board. You know, you've got what lots of venture capital funds and angel investors are looking for is, are you a coachable person? Do you listen to what they have to say? So ideally, what you do is like you come back, you do the $0 plan, come back in 12 months' time, see the venture capitalist who knocked you back and said, I listened to you, you told me to do X, Y and Z, I've done X, Y and Z, now invest. So just show that resilience, show that persistence. And you know, as Graham Speak did, he pitched to me 4 times, you know, before I eventually said yes. So I know it's hard.
So I think that piece of that resilience is really important for, you know, people once they get, if they get rejected initially, but they come back and they follow through with their 6-month plan, you know, like I think that's really important to encourage people to keep going.
That's right. I mean, that's one of the factors, you know, and success is people who are resilient. Like Gio Moby through the Focus Upstart. Chris, he's resilient. He's just been going for a long time, raised a family, raised kids, and he's just, you know, really, really resilient. I mean, startup journeys, we're talking about 10 to 15 years. To go that long, you need to be really, really resilient. And it's hard. We'll talk a little bit about a realistic valuation. Valuation is a little bit, it's somewhere between art and science. We'll talk a little bit more about that. Sources of capital. In Perth, +8 Accelerator program. I think expressions of interest for that are open now. That's essentially $50,000 or roughly $50,000 in capital going through the +8 Accelerator program. And what's important, the problem with the Focus Upstart program that I ran is that we didn't have any further backing. So we gave startups $40,000. They went through the 12-week Accelerator program. And at the end of that Accelerator program, on average, the startups only raised $50,000 each, which really wasn't enough for them to like keep going and be successful. In the US, the same program that I ran, which was basically the Techstars program, startups going through that program, on average, those startups raised $500,000 each after completing the Accelerator program. So what happened with the Focus program was that basically we accelerated startups into like a bit of an abyss, you know, in which there was no capital. So many of them basically just went back to their day jobs or found other startups. But I think +8 is different. +8 has the backing of RAC and their Better Labs VC fund. So going through that program is basically a potential introduction to Better Labs. Also, Derek and Kylie Gerard run +8 program. They are running that program this year, and they are also behind Purpose Ventures venture capital fund. So essentially, going through the +8 Accelerator program, in a way, you are basically putting yourself in front of 2 venture capital funds, being Better Labs and also being Purpose Ventures. So that's something to consider. Startmate out of Sydney, 120K, pretty hard to get into. I think there's maybe 1 or 2 startups in WA that have been through Startmate. Angel investors, and that's what I'm here to talk about today. In Perth, there is the Perth Angels, an angel network here out of Perth that's been running probably for 10 years as well. And there are comparative angel groups in every state and territory in Australia. I'll talk a little bit more about the West Tech Investor Network that is an angel group, a little bit different. So angel investors typically investing between 10K and 500K. In Perth, I think the check size is more down the bottom end of that scale in terms of 10K. There's lots of angel investors out there who have 10K. I've seen cheques floating around. I've seen investors write cheques for 500K, but that's probably 1 a year. Yeah, it's few and far between. The reality is what happens when you think about investing 500K in a single startup. You've got to have a lot of wealth. What tends to happen is above 500K, those people are so wealthy that they set up a family office. They'll call themselves a venture capitalist or a private equity player. So the super high net worth individuals don't see themselves as angel investors. I know one guy who provided a 500K cheque refuses to join the angels because it uses the word angels. He doesn't, yeah. So, yeah, if you're looking to raise money from angel investors, I would suggest that the upper limit of that is 500K. It's probably the most you can expect to raise from angel investors. And the reality is it's probably more like 200 to 300,000 is probably what might be realistic. I mean, people do. I mean, people do raise. You do hear stories of people raising $1 million in angel investment, but those stories are few and far between. So really, if you're looking to raise more than 500K, you're really starting to move into a different space. And there are lots of players in that space. You are now moving probably into the space of the venture capital funds. Most of these venture capital funds, After Work, Purpose Ventures, Blackbird Ventures, do invest at early stage, pre-seed, seed stage, will write cheques for a couple of $100,000, but that's probably not the majority of the investment. The majority, 80% of the funds in these venture funds will be in later stage companies, but they will have an allocation to pre-seed and seed stage companies. In the middle, emerging over the last couple of years is investment syndicates. So the way those investment syndicates work is that angel investors each contribute small amounts of capital. Let's say 50 angels put in $10,000 each, and they invest via a syndicate into a startup. So the two major syndicated investment players probably in Australia are 1013 out of Brisbane. That syndicated investment group comes out of Steve Baxter's family office. 1013, they were here last year. They came across for the West Tech Fest. So they're looking for investment opportunities in Perth. And so you potentially put them on your radar. They invested, I think, $29 million, including last year, including investments into 14 new startups. So that's a potential opportunity. The guys from Tribe Ventures, they were here only last week or the week before. Again, they are an investment syndicating platform where they're doing investments on a deal-by-deal basis. So they'll go out to the market, they'll find a startup that looks interesting, they'll put some money in themselves, then they'll go back to their investors and say, hey, do you want to invest alongside us? So I know 1013, for example, have got 500 investors on their books who co-invest with them via syndicates and startups that they find. Venture funds, I think, speaking here at Morning Startup, it's your question.
Thank you. Are they agnostic funds or have they got an appetite for specific? Because it's great to put them up there, but sometimes someone just purely focused on digital or, SaaS or whatever, others are medtech.
Yeah, that's right. You'd have to look. Yeah, I think you'll find that Purpose Ventures is agnostic. Blackbird Ventures is, there's no one who's completely agnostic. They'll all have some sort of specialty or leaning towards preferring particular areas. Like I know StartMate are really big into robotics at the moment. Artificial intelligence is a common theme. So, do your research, right? There are lots of venture capital funds in Australia. They all have a niche in terms of, or a focus on the types of startups they're focusing on, stages they're focusing on. And I'll talk a little bit later on. There is information available on those funds. So do your research. You haven't got a lot of time. Find the funds that you think are the best match. So do your research. Don't just blindly go and pitch to a VC. Yeah.
I've got a question. I met with one of the investors 2 weeks ago from After Work.
After Work, yeah. Mm-hmm.
And Alex said details, and he asked me to email him. What do you do when you've emailed them and you don't get a response? Do you keep going? Because he invited me to email him.
Yeah.
What's your advice?
Yeah, follow him up. What else do you do? Follow him up. Follow him up. Yeah.
Is that what they want to see? That persistence?
Yeah, absolutely.
Some of us aren't salespeople.
Yeah.
They was in that instance, knowing the team at Afterworks, you will be put into their generally expect maybe a 2-week turnaround. Because you'll go in, they will then discuss internally. They'll have a meeting whether or not people. You'll hear whether or not they want to move forwards. Probably about 2 weeks afterwards.
Great.
Yeah.
You're just not knowing what to do.
Just to answer your question, Tribe will only invest in, when you look at your VCs, Tribe is a B2B. So again, there are some VCs that will only be B2B, and B2B seems to be everybody is being the dad bod at the moment. So a lot of VCs are really loving B2B.
Yeah. Okay, I'm going to move on. 10 minutes. Is the West Tech Investor Network. So we've started an investor network that's a group of 20 angel investors. We're clubbing together, each committing to invest $10,000 each, creating a pool of $200,000. And we're planning to invest that in tranches of $50,000 to $100,000 across 2, 3, 4 startups this year. It's not a lot of capital, but we've got to start somewhere. And the plan is that we'll keep growing this year on year. And hopefully, my goal and ambition is that we get to a point where we're investing $1 million a year in angel capital in Western Australia. Our requirements must be incorporated. We're looking for WA founders, must have a minimum viable product, and must be a novel solution to a clearly defined problem. That QR code will take you to the West Tech Investor Network website, where you can see the profiles of the investors involved in the syndicate, and it also will provide you a link through to the application form for the network. So it is an angel group. We're co-investing together, up to 20 angels, and basically we invest via syndicate, which means on your cap table, in terms of investors, you have one entity on your share register, which will be the West Tech Investor Network, rather than having like 20, angel investors. And just on that point, I'd say that generally, if you're raising from angel investors, probably up to 5, I reckon, is probably a good number. As soon as you get beyond 5, it's perhaps getting harder to manage. And the next investors, if they're venture funds, may be concerned if you have too many angel investors on your register. So generally, I reckon the number probably 5 or less. Coming back to Paul Bassett, who knocked me back originally, as an Australian Financial Review article about what he looks for in a startup. Again, coming back to this point about solving a problem is a really, really important part of it. And what he says at the bottom is, most importantly, who are the teams solving the problem? Early stage investing, I don't know if your idea is a good one. I don't know if your solution is good. Is there necessarily a market? Is there an opportunity? So really, early stage investing is about investing in people. So it's no different. Tech's no different to investing in any business, right? It's about investing in the people, their capabilities and their capacity. So as an angel investor, that's what ultimately we're looking at. VC funds are the same. They're looking at the team involved. Does the team have domain expertise related to the problem? Can they execute? Have they got resilience? So really, it's all about investing in people. I hate to use the Canva example because the Canva example probably is overused, but Canva, Melanie and Cliff, they tried to raise money for a long time and they were not able to raise money until they brought on board a tech co-founder in the form of Cameron. So what's really, really challenging is great, you've got an idea to build a product, but you don't have any software skills. Generally, that's one of the first things we're looking for as investors, is your capacity to execute. And that means if you're doing software, you need to have a software engineer as part of your founding team. So I've forgotten your name in the orange shirt. Alex. He is a very, very valuable man. People who are out there who are software developers who are interested in being involved in a tech startup, that's kind of really necessary, because what you need in terms of a team, if you're building software, you need to have a tech co-founder, somebody who's part of your founding team who is a software developer, or you learn to code yourself. And when I say part of your founding team, probably you're looking to, as an investor, you probably want to see the tech co-founder who's probably got at least a 10%, maybe, equity stake in the company, because you want to be sure that ultimately that person sticks around. So in terms of building a team, you're looking to have balanced skills, share equity fairly between you, and show some commitment. No one's going to invest in a startup. If you've got 2 or 3 jobs going at the same time, then probably, people aren't going to be willing to invest. So if you want people to give you your capital, you've really got to show commitment to your startup. I did have mortgage your house in the brackets there, but I don't think that's a good idea. Don't mortgage your house to do your startup, but by all means, sell your car, which I know of entrepreneurs who've sold their car to get the capital to start their business. So building a team and having a tech co-founder as part of your team is really important, I think, to raise capital. Who are angel investors? Angel investors are generally successful entrepreneurs or retired executives. There are not many retired wealthy executives investing in tech in Perth. Most of the people investing in tech are current entrepreneurs themselves. And as I said, investing anywhere from 10 to 500k. I would suggest that there are 2 types of angels in Perth. There are what I call super angels, people investing more than 100k. Those people are pretty hard to find. But the vast majority of angels in Perth probably sit in that 10 to 100k category. And ideally, angel investors are looking to not only just provide capital, but hopefully help you on your journey, which may well be provide some advice, provide some networking introductions to potential customers. So hopefully angel investors that you have involved in your company can provide more than just capital and can hopefully help you on your journey as well. Where to find angel investors? Get involved in the startup ecosystem. Pitch into the Perth Angels. Currently, that's open up. Applications for the next pitch session are open now. Apply to the West Tech Investor Network. Great place to start. Airtree have got a list of investors on their website. So if you Google Airtree investor list, it's got a list of venture capital funds, it's got a list of angel investors, and really I reckon that's a good place to start. Build a list of potential investors and basically look around to see where you can add more to that list. Look through the young rich list. Look at recent investments in Perth and see who has been investing. Like for example, I think you look recently in Perth, Lawrence Escalante of VGW fame has been investing in quite a few startups over the last 12 months. Talk to other startups about who's invested in them, and also talk to your customers. You'll find that there may well be, not only will your customers be customers, you may well find that your customers may want to invest in your startup as well if you are solving a problem. So that's probably, there's lots of examples I can think of where essentially the customers have ultimately been investors in the company. Example I can think of is a company called Fleetsu, who I invested in through the Perth Angels. They were developing a fleet management solution, and essentially one of their investors who invested, I think close to $1 million, was in fact a Toyota dealership. So it was the founder of the Toyota dealership who invested $1 million because he could identify, see the problem, understand the solution. So potential customers could well be a really good source of capital. And that means as well you're doing two things at once if you're doing that, right? You're not only are you potentially getting money from your customers, you're also potentially getting investors. So I would suggest that perhaps the first part is looking at customers. How to approach investors? As I said, most investors in Perth are current entrepreneurs who don't have a lot of time, who don't have time to wade through information memorandums, long pitch decks. So first part, a concise pitch deck, telling a compelling story. I'm saying here, this is really tough. Ideally, try to target the lead investors first, those ones who perhaps might invest more than 100K, who maybe negotiate the terms. Really hard. How do you identify who's a lead investor and who isn't? Who has got 100K and who's only got 10? It's pretty hard to follow that piece of advice. One piece of advice that I do recommend is seek a warm introduction if you can. If you identify somebody who's an angel investor, use LinkedIn, identify who might know that person and seek a warm introduction. And there's a great saying that if you want money, ask for advice. If you want advice, ask for money. So I think the first port of call, is basically seek an introduction to a high net worth angel investor and ask them for their advice. And ultimately what you may well wind up out of that process is they offer to give you money. And really important, do your due diligence on angel investors. Before you take an angel onto your share register, do your own due diligence. Ask, who have they invested in? Get a referral from the angel investor, who they've invested in, get a contact name of one of the founders and ring them and find out about that angel investor. The last thing you want is to get a bad investor on your share register. And that's accepted, I think that's good practice. As an investor, you're asking me for who I've invested in and asking for a referral. That shows to me that you're thinking intelligently. What are angel investors looking for? We've talked about this already. A real problem, a great team. Challenging one, demonstrable traction, preferably revenue. As angel investors, we'd love to see startups that have revenue, have customers. The ultimate proof that customers are interested in your solutions if they have paid you money for their solution. But there are other ways of demonstrating traction. For example, getting customers to sign an expression of interest that says, if you develop a product, I will buy it from you. Other ones I've seen are newsletter sign-ups. Subscribers to a YouTube channel. There's lots of different ways that you can demonstrate traction, which you can prove that you've got something that people are interested in. So there are many, many ways that you can demonstrate traction. Investors are looking for an opportunity where they can add value through their advice and connections. Basically, like most people, we're looking for a return that is 10 times our money. So the reality is, as we've talked about, most of the investments in my portfolio will fail, which means in order to make money, I need at least one startup to do at least 10 times my money. At least 10 times, and that's the starting point. So if I'm looking at your company, I've got to see the potential for 10 times my money. So if you're pitching at a $10 million valuation, then I need to see the potential of you being a $100 million company. Lastly, offer a meaningful percentage 10% at a minimum 10% at a realistic valuation. So, yeah, it could well be, let's say, $500,000. You might be seeking to raise $500,000 on a $5 million valuation. That's 10%. So 10 to 20% is probably the range if you're raising capital. Offering somewhere between 10 and 20% of equity in your company would be the norm. But that's in terms of the whole investment round. As an individual angel, you would be taking part of that round. Right? So my benchmark as an angel investor would be like, I want to have like maybe 1 to 2%, 1% of the company. So if I'm contributing $50,000 into a company that's got a pre-money post-money val of $5 million, then that's 1%. This is my somewhat controversial slide, which is what is a realistic valuation depending upon the stage of your company. I originally did this slide presentation in 2016, and basically when I went through and updated it today, I doubled the numbers. So 2016, the numbers I had in this slide were half that. So that attests to what has happened in the startup ecosystem over the course of the last 6 or 7 years. So that's the framework I use. Every investor will have their own framework in their own mind about how they value things, and they won't necessarily be the same as mine. But that's kind of my a rule of thumb, if you like, for evaluating startups.
The current one I'm seeing in the industry is 4.5 to 6 times your revenue.
Right.
So that's the kind of maximum.
Yeah, which is challenging if you don't have revenue, right? But yeah. There's two factors. One is your revenue, and then how fast your revenue is growing is the second factor. So again, I won't go through that in detail, but if anyone's got a brilliant idea today, $20, I'm prepared to invest.
All the states will say that, man, you've undervalued yourself. And then when you are in Perth, you say, man, you're overvalued yourself.
Yeah.
So there is this huge discrepancy, which I think is why one of the reasons why Canva had to go to the US before they had to turn around to Australia, is because the investors here are not willing to back companies that had that kind of valuation that another country are more than prepared to accept. So it sort of forces all the companies to have to have this brain drain going overseas, because that's where the money is, or at least that's what they get.
Yeah, I think that's fair enough, and that has been what has happened in the past. I mean, I think there is always going to be a valuation gap between what you can raise an evaluation in Australia and what you can raise as an evaluation in the US. US valuations are typically higher, but I think over the course of particularly the last 3 years, you've had lots of US venture capital firms coming to Australia, and those vals have probably gone up to be pretty close to what they are in the US. Probably with the current economic climate, we'll probably see that valuation gap, perhaps, as US venture funds are pulling out of Australia, you perhaps see that valuation come back. So, yeah, valuation is difficult. Valuation will be different in different markets.
Let me just ask a question there. Is this the same product being served in the international market, or are we just talking Australian valuations being served in Australia or American valuation being served in America? Because there's a huge difference in the size of the market.
So, but then you have this problem, right? You can't basically, and like in the US, they want you to be based in the US in order to invest in you, right? And then you won't be, when you build a startup, you are actually building with a global mindset. You start out saying that, man, I'm going to get this solution out of the world, and not say that, okay, I have a valuation here for the Perth market, and then I have another valuation for the US market.
You've got to come back to this is where founders, I think, need to be realistic in valuations, and I think that's where the market's coming into play now. You've got to be realistic in the fact that some of the valuations we've seen, which were like 20, 30x their annual revenue, then you're essentially asking an investor they're going to wait for a business to get to 30x that before they'll ever see a return, right? So as founders, we've got to be realistic to say, at what point is there going to be a liquidity event for us or for the investors? And so therefore you've got to look at, they're either buying in now on the fact that you're on a growth, so whilst they're factoring in that growth, I would recommend go and watch, there's a podcast called All In. There's about 3 or 4 weeks ago, there was a really good talk on it, essentially going, you're either buying at this because you know your investment will be like that in the future, but you've got to factor in essentially where you see your growth going from your revenue. Ideas are worth nothing, and I think we've all got to be realistic as founders now that the markets are not, we've had a decade of cheap money, that is gone. We're about to hit the biggest recession that the world has probably seen in like 3 decades ago. So if you follow the markets. So I think as founders we all need to be really realistic about our valuations.
All right, it's 8:30, so I'm going to finish up. That's just a summary of my 10 steps to raising capital and closing out. Number 8, open an investment round, commit to the process, go hard, minimum 3 months, and close an investment round. But don't leave an investment round open. If you either close it, move on, get on back to talking to customers, and then come back later on. So that's the 10-step process.
I'm testament to that. I did that. I kind of like, yeah, I'm raising, and then it didn't. And you actually burn bridges if you do it that way. So commit to doing an investment round, or don't commit to doing an investment round. Because if you're kind of like, oh, I'm going to do a round, but I don't want it, you lose face with them. And I learned that the hard way. So thank you very much.
No worries.
Let's have a round of applause.
Thank you.
How do people get in contact with you?
Either by LinkedIn. LinkedIn is probably the best bet.
Perfect.
Anyone happy to send an invite, say you're at Space Cube this morning, happy to connect with you on LinkedIn.
We've got
home address.
We've got time for maybe a couple of questions. I will call it a couple of questions. So this gentleman here was pretty eager at the back there. Let's do a mic up the thing. Let me just have it so the people are here.
Crowdfunding. I had one pro investor says he hates it because it messes up the cap table. Another angel says it's a good idea because he sees it as a way to exit dud investors. What's your opinion on crowdfunding?
Look, I think there's no doubt crowdfunding has been really, really successful for some startups that are in particular genres. What springs to mind is, Rene Bunster's Hot Sauce, really, really successful. Capital raising. What else? Tiller Rides, yep, those sort of consumer-based products. And probably those companies will never probably go on to raise venture capital. And those basically, what you're doing there in crowdfunding is you are funding predominantly from your customers. I think it's a really, really good strategy if you are basically in that space. Yes, a venture capital fund, I'm not sure what their views are on companies whose cap table includes a crowd-funded.
I think you've got to be a really specific company to do crowdfunding in that sense. You see it's very consumer focused.
Yeah.
We've got time for one more question. Go on.
Thank you. Morning, my name is Jim. I'm head of scoping at a software company and they're allowing me to do my own thing as well on the side. So I'm the one who does those requirements and use cases and Figma prototypes and that kind of thing. What else can I do for people who take that work for a pitch to investors? So a lot of this is straight to development, but some people are taking that work to investors.
Yeah, the reality is, I think most investors are going to be sceptical about investing in a startup that firstly hasn't built something, built it themselves or built the first version of the product, and investors will be super sceptical about that type of investment opportunity where there isn't a technical co-founder in the team and they are yet to build anything. Look, if people have built the first version of the product with a trusted third-party developer, then that's probably the base level.
If all those boxes are ticked, would they look at things like use cases and certain planning ready for, how much of my document would you care to look at the start of this process? Because a lot of people are taking it, trying to build a pitch out of it.
Right. I wouldn't expect to see. I wouldn't expect to see that included in the pitch process. If I went to a due diligence phase in the company, then I'd want to see more detail in terms of quotes from software developers. So if people are including that sort of stuff in their pitch deck, right, then there's probably, probably overkill. We're more focused on what's the problem that you're solving, who the team is, not so much about the solution. necessarily. Yep.
How do you prevent your business from being hijacked or 70% set up and then some of the workers and the investors get compliant and take your business over? How do you prevent that?
So you're a software developer, so you've provided a quote to a startup? Yep.
Developer with the investor or the client says, oh, I can be cheaper if I take these two guys and hire them directly. And
Yeah, that's a risk. I honestly haven't seen that actually happen. That scenario that you're describing, often doesn't happen.
No, doesn't seem to happen. I mean, the best advice I would say to you, and Scott will probably say the same, as founders who have gone through this place, there is no better money than customer money. And I always remember being in San Francisco as part of the Plus 8, where we had a scenario. We met with Gingy Lee from Happy Co. His company started in Adelaide, moved over across to San Francisco. He told us his story where he essentially had this idea and he took it to real estate agents and said, this is a problem you have. If I solved it, would you buy it? And they went, yes. And that created his business to go on. And I was always thought that was just a magical thing, that how can you get a customer to back something that is not built yet until you do it yourself? And then that's when we did it with our business. And then before you start to get that traction, you start to get customer money. So my advice would be bootstrap as long as you can initially. And if you can get customer money, that gives validation. When you go to an angel and you go to a VC, you can show that you've got the start of what we class as product market fit. And that you've got validation that there's genuinely somebody who's willing to part with cash for that service. If you go to them with this idea, very rare. I mean, we've seen a few during last year. We saw some really big raises on an idea. But I just don't, I think those days personally are well and truly gone. The fact that money is now expensive. So, thank you very much.
All right, thanks. I'll be hanging around for the next half an hour. If anyone wants to have a chat, ask any further questions.
We will be back here in 2 weeks' time when we have Learn to Code in under 6 months. And then after that, in 4 weeks' time today, we have a panel session for the new careful how I use the words.
Funds in Perth.
Yes.
Yeah, so the New Industries Fund had a Waves program where they are funding new VCs basically to establish their funds in Perth. So it's very exciting.
Yeah.
We've got
So
3 new companies that you can go and speak to about raising capital from. So that's Quokka Ventures, Fund WA, and Purpose Ventures that Rob talked about today. So that's in 4 weeks' time. But yeah, before that, we've got Dale talking about how to become a coder in 6 months. So that should be fun.
We'll see you all back here in 2 weeks. Thank you very much. I will be moving around trying to put the chairs up, so appreciate it if I'll be asking you to move out of the way in the politest, nicest way I know possible.
But help yourself to the food at the back. Thanks to Keep Space, and get to know each other. And thanks for coming. Cheers.
No,